Welcome back to Money Discourse. Sorry, we're late again with another episode. It's because we've been jet skiing in Honolulu. No, we haven't. I've been getting my ass handed to me in the markets, but Rajan has been making an absolute killing. So, what we're going to be talking about today, are we going to continue hitting all-time highs on the Qs and the S&P, or are we going to hit a market crash? We've got the bank term funding program ending on March the 11th. Warren Buffett is saying that opportunities to outperform are low, and billionaires like Jeff Bezos and Mark Zuckerberg are selling. So, Rajan, what do you have to say?
Yeah, I mean, it's been, anyone who's following the markets right now just can clearly say it's been a pretty wild time right now. I mean, we're seeing all-time highs in the S&P. We saw all-time highs in the NASDAQ across Europe in many of the major indices. But unlike previous all-time highs, the breadth of this rally is so narrow. I mean, pretty much the market is totally dependent on what Nvidia is doing, Microsoft, all these AI plays, and there's these huge. I mean, let's talk about Nvidia just quickly. It went from about 600-700 billion market cap company a year ago, or less than a year ago, to 2 trillion. So that's just 1.3 trillion added on to the US stock market value, which is about 10%. So that if you look at where Nvidia is, I mean, that largely alone is attributed to so much of this rally. And then couple that with Microsoft and all of these AI plays that are going up. And so we're seeing this bigger and bigger concentration from a smaller amount of names pretty much run this whole market. So it's now starting to become a bit more like the Swiss market, where Novartis and Roche pretty much dictate what the Swiss SMI is doing. And we're getting to that level here in the NASDAQ especially, and still in the S&P 500. And I saw a stat, I can't remember exactly the exact numbers, but the S&P 500 is at a concentration level where like the top 6 or 7 pretty much account for us the highest portion of the S&P 500 in, I don't know if it's ever or in a very long time. So, so this is what's pretty much dictating this whole rally. I mean, you look at Nvidia, and Nvidia's up 40-50% this year, and SMCI, another one, up just massively. Now we're seeing these crypto names, even though the market cap is big, but they are all ramping on these on the massive move in crypto. And again, so we're seeing crypto now rallying, and Bitcoin has been rallying this whole time, and Ethereum, and now a lot of these altcoins are now all joining in as well. So we've seen Dogecoin up over 20% yesterday, Sheepcoin up 20%. So it's all starting to look like this familiar pattern that we've seen in the past, where we've seen a lot of these big moves, a lot of crypto now starting to join in, and it's now all starting to make me a bit nervous, to be honest with you. And so that's why I'm just been selling anything I can while it's going up, while still maintaining the core position, but just taking a bit off just to be prudent in such a market. But again, like I was saying, we've seen some of the biggest, I can't remember a quarter where we've seen so many 15-20% moves. I mean, we saw Facebook or Meta trading up 20-25%. Nvidia traded up 10%. Can't remember how much that went up, about 10-15%, no, 15% on earnings or something. And we're literally just seeing just such huge moves everywhere, up or down. Today, Snowflake is down 22% after being a darling for the last few months. So not all AI is built equally based on Snowflake, but yeah, it's been a pretty wild ride, to be honest with you. But the main thing is there's been opportunities, and that's what you ask for. Now, whether you make money on those opportunities or not, that's another story. But at least the trading opportunities are much better than they have been in this like damp market that we've had recently. So so it's not bad. But I mean, what do you think? How sustainable do you think this is?
Yeah, I'm not sure. I mean, we already went through like a massive crash, it seems like, not too long ago. But like I said in the beginning of the episode, Bezos, Zuckerberg, they've all been selling. Bezos sold $8.5 billion worth of stock, and Zuckerberg 400 million. It seems like a lot less. Jamie Dimon also offloaded about 150 million of JPM. AMD stock, Lisa Su sold a whole bunch of AMD stock. And if you look at the last time that Bezos was selling, right, and Mark, right, was December 2021, right, just before the crap hit the fan. Jamie Dimon's first time he's selling since he took up the top seat. It seems like a lot of these names have been quite extended, but I don't know. Other people are saying this is just the beginning. Will the Mag 6 just carry on taking the huge portion of the pie, or will everyone else just kind of catch up and these guys take a breather? I'm not sure.
Well, this is the thing. It's an interesting point you brought up. Like, I mean, you always follow the insiders, right? And the thing is that when you say this is the start of a new bull run, a bull run can only start if the rest of the market joins in, right? So you sort of say that the bull run, in my opinion, can happen if you start getting participation from a lot of these sectors. But as of the main drivers of this bull market now, it looks like on the outside, this is amazing. Like the stocks keep on going up, this and that. But again, like I mentioned, it's just such a small concentration. But we hadn't seen banks as well. I mean, JP Morgan 182 last time I checked, Wells Fargo all-time highs. So we've seen financials performing as rates are higher, and yet the economy is perceived to be pretty strong. But on the ground, is this market really reflective of what's going on? And not always it is, but when you've got such a, like, again, Microsoft 3 trillion, Apple 3 trillion, Nvidia 2 trillion, Facebook, Amazon, Google 1.5617 trillion. I mean, it's you count those companies together. I mean, Nvidia, when it went up on its earnings, went up a whole AMD. I mean, 200 billion, just add up 250 billion on their market cap. You know, it's just freaking insane. But again, I think looking at the insiders, being prudent, and the thing is that this market can only be sustained at these levels while these mega caps are sustained at these levels. And then I think there has been a lot priced into these mega caps, and it clearly is a lot. They're getting a lot of dollars from all these ETFs as their pie, as their percent of the pie keeps on growing. You know, all these passive funds, everything, just buying more and more of all of these stocks. So naturally, you're getting a lot of dollars pushing this up. But again, if the insiders are starting to say, I'll take a little bit off here, I mean, eventually people are going to start taking notice. So
even the Walton, even the Walton family sold $4.5 billion of Walmart shares. So it's not just the tech and banking space. It seems to be, you know, retail as well. And what do they know that we don't know? This is the thing.
I mean, what they know is that they don't know anything more. They just know that, okay, this is a bit of a euphoric sort of stage right now. It's pretty wild. But I mean, let's just look at the charts, right? So here we got the S&P 500. And again, I remember saying last year, I think we're going to stay in a pretty range-bound market, which we actually did until the end, until everything just went skyrocketing. And we pretty much have put on like 900 S&P points since November, just before the November low. So in 3 months, we've pretty much gone up 25% in the S&P, which is just wild. But then you coincide that with Nvidia and Microsoft and all of those, and then it all makes sense. You know, it'll be interesting to see what the S&P 493 is right now when you take out those mega caps, what the type of growth has been in the last 3 months. But clearly this is, you know, large cap driven. But again, we're now just bounced off that upper trend line that we've been that we hit from February. So we went from February, hit that trend line, then in August we hit that trend line again, and now we've just hit it again in February. So the question is this going to keep on going? Is it going to break above this level, or are we going to start normalizing back towards the 5,000 and back towards 4,700? And again, it's hard to sort of know. I mean, no one can really predict these things, but it largely depends on the momentum of these mega large cap companies. And again, at a point, I mean, when does this valuation start capturing all the potential? And so I'm pessimistic that we're going to continue this trajectory unless we start seeing other companies in the S&P 500, in the NASDAQ start joining in to the same level as these mega caps are. But again, like I said before, this is all controlled by the mega caps, and whatever they do, that will be the trajectory of this market. So
but we just need a catalyst, right? To, like, the market changes its mind pretty quickly. So it really depends. What is that catalyst going to be? You know, some people are saying it will be the emergency bank lending program expiring on March the 11th. So they, you know, the Fed could, in theory, kind of engineer some kind of cooling effect on the market if it wanted to.
But I mean, we'll be coming back to this point and go, look, the signs were there. We should have seen it. It's all these guys. But also, you know, one thing is it's prudent to take profits. And these guys are seeing huge gains. And, you know, the stocks ain't going to buy them a living and their fancy yacht. And, you know, Jeff Bezos can't keep on buying these houses in Miami with Amazon stock. He needs to sell it and get that cash money, you know. So this is what we can't keep. So we can't
keep going jet skiing as well. So, you know, off Rajan's SMCI short.
I have to update that trade. So I actually ended up getting out yesterday, and that trade took a small loss, well, bit of a loss. But
you were up so much.
So for the website purposes, I took a loss, but in reality, I ended up selling some puts and actually making a profit. For the Money Discourse portfolio, I have to book the loss, but because with the amount of money that is based on, there's no way you could sell a 550 put, right? You need too much margin for that. But personally, I didn't end up taking a loss on that. So that is to clarify that, but I will update that. But again, like I was saying, my trades that I just love doing are just shorting these crypto pumps, right? And you know, Mara, I've just been in and out just untold amount of times, and that's been working out pretty well. Again, Carvana, like, man, that's killed me in the past, but I've just got back in that again. Just love, you know, just there's only so much of a massive rise I can just look at without not getting involved. So Carvana is another one, and what do you call it? Palantir, even though a lot of analysts are very, very bullish on it. Again, I don't really care about the company that much. I'm just looking at the trajectory of the price move. And the only thing that I'm not shorting really is Nvidia, because yeah, that would be a bit too much. That's just crazy, you know. So yeah, I mean, if you look at some of these earnings, I mean, first of all, we talked about Meta before, but Meta had a huge move. And again, if you look at where a lot of their profits came from, it came from, they cut around 10, 20, what was it, 10,000, 11,000 jobs, and they're talking about cutting further amount of jobs. So it's all about reducing the fat. And then that is what's happening with them. And then so Meta's having a really good run. Again, can you imagine that was sub 100 literally a couple of years ago, a year and a half ago, and now it's almost 500. That was a 5x. I remember Meta employees were complaining, saying that you know, a lot of their stock compensation was so underwater that they need to get their stock compensation reevaluated. Hey, look at it now. See, you don't see those people complaining when it's $500, but as soon as they're offside, then all of a sudden it's a different story. You know, these guys, they don't understand. You know, a lot of these people that have stock compensation, they don't understand the market dynamics. This is a share of the profits based on the performance of the companies. You can't just pick and choose, you know, when to be happy and when not to be happy, you know. So I'm sure some Tesla people who are, depending on when you got it, are now thinking, oh, my options are, not ramping like they should. Elon, behave yourself. But, you know, everything will happen when it's supposed to happen. So, you know, talking about Tesla, we're seeing a lot of pressure on these EV companies. So we just had that huge decline in Rivian when they pretty much gave their production guidance for 2024, which was flat year on year, which is like pretty incredible given that it's supposed to be a growth EV company. And then you got Lucid, as usual, losing bucket loads. And then you got Tesla, which is stagnating, has come back off the lows a little bit, but again, it's stagnating. And in general, the EV picture seems to be a lot more subdued than it once was, with a lot of inventory out there, China flooding the market. I mean, being the resident Tesla expert, like, what is your take on the EV situation currently?
Yeah, it's not a great one, it seems. It seems like a lot of the legacy automakers are pausing plans for their models, or even just scrapping, you know, like we had VW, I think at one point saying 26 new models or something like that. They used to put out all these crazy press releases. And now, you know, there's a lot of these kind of internal memos being leaked, etc., you know, that they're just like scrapping all of that and just trying to get back to how, you know, the good old days where, you know, it used to just be a push for ICE. Also a bit of a slightly different tune that the market has in terms of thinking that EVs are the future. You're kind of just like completely decimating the stocks. But again, Tesla stock isn't the Tesla, the company, you know, they are like, it seems like two separate entities at the moment. You know, Tesla's still doing a phenomenal job of like just getting out a huge amount of volume, whilst Rivian, it doesn't seem like they're able to grow. And Lucid, oh my God, you know, there's some, unless we have some kind of bailout from the Saudi fund, you know, it looks like, you know, these guys are, yeah, definitely. They've just got the wrong product, unfortunately. There's too much competition in the space, even through from Porsche, Audi, Mercedes, as the kind of legacy luxury plays, as well as, you know, Tesla. And I think for each Lucid that sold, I think it cost them over $500,000 to make it, right. So that's how much they're losing on it. Rivian are also losing quite a bit, but you know, they need to. The problem is with Rivian stagnating in terms of their delivery forecast. How are they going to get their costs down? And if they don't get their costs down, unfortunately, their margins can't improve to the, you know, to become profitable. So I don't know if this is just kind of a blip in the EV market, but like you said, that China is really pushing through, and they are coming like at the bottom end of the market. There are some phenomenal deals if you live in a place where the Chinese market has like a foothold. It just seems like it's a no-brainer really to buy their products on the lower end. So it's just literally Tesla who are just kind of flooding the market and still making a profit. Luckily, they were in a space where in the market where, you know, their valuation went up huge and they were able to get profitable in the right stage of that EV kind of like hype mania. And unfortunately, everyone else, it seems like, you know, they're arriving to the party a bit late. And yeah, things aren't so great for them. But yeah, in terms of like Tesla, looking at they were doing a whole bunch of price cuts, but it seems like from March 1st they are like increasing the price of some of their models, like the Model Y rear wheel drive and long range. They're going to be increasing them by $1,000, and I think that if that does stick and it's not like just a quick rise and then like 2 weeks later it comes back down, investors might feel like there are kind of hopes for the margins to get back to a stage where it's on the up again rather than just on the decrease, and we just kind of hit a floor. What do you think?
Yeah, I mean, exactly, because I think Tesla have now reached a level with the pricing where each incremental, like all these price cuts, doesn't really necessarily translate into a demand, like going up by like a significant amount. And I think they just got to now accept where it is, and realistically, they're not, So I mean, again, I don't know what the numbers are. I don't know what the figures are. Like, I'm sure they've got everything, but if you think about it, every time someone's buying a new car, you sometimes fear like, oh, how much am I going to be offside straight away? And the amount of used car deals, like the value of used cars now, how much they plummeted. Do you remember when we used to have that conversation? You go, I bought this Tesla, this time, and 2 years later, it's still worth the same amount. In fact, I could sell it for a profit. Now you look, and now probably can't get virtually anything for it. So it's just, and that's the same with so many EVs, and that is with us that bought it at a reasonable price. And imagine the people that bought it literally a year and a bit ago, before they start this aggressive price cuts, and they were paying premium like 75,000 for a Model X, Model Y, and now you're looking at a 40 grand hit in literally a year and a half. And
even the lower end,
yeah.
Even the lower end, like Nissan Leafs, they were being sold for something like 28,000, 32,000, something like that. People were buying them in 2021, and now just like 2 years later, they're like worth 11,000, 12,000, right? They've just taken such a massive hit. But the thing is, this is a fantastic thing for those who are looking for secondhand EVs and, looking for a secondhand vehicle that's going to likely have not many problems. It's great to kind of fill up that vacuum that was the lower end, of the EV market. But again, what we need is really robust demand for new vehicles, and all of the automakers need to feel like that is the future. Otherwise, we're going to just carry on getting sold the legacy ICE, and there's going to be continued investments for that.
I mean, can you imagine, like, if you look at some of the deals right now, I mean, like Lucid, they were $140,000 cars, and now you can get like, I think, a Lucid Air for like $799 a month on a lease. It's pretty wild. Some of the deals that could get out, which is great if you're looking for it. But if you already got one, again, the question has been raised before. Car loans. That's why when you look at companies like Ally Financial and some of Synchrony and some of these big car loan, there's a lot of interest to see what their loan book looks like. Like, what's their provision for credit losses? What's that all looking like right now? And will it topple? So that's one thing to look out for. We've been saying it for a long time, but
in that example that I gave for the Nissan Leaf, being bought for around 32K, and then like 2 years later it's worth like 11, 12, but what's still owed on the loan is 21,000, right? So like,
exactly.
Are we going to start seeing a 2008 again where people are just kind of leaving the vehicle?
And like somebody, I remember honestly, like, people were taking out $1,000 a month payments for Teslas, well, not just Teslas, loads of cars. But now so now you can get the Teslas on lease for $350, $400. You're literally paying $600 a month more than what you can get it right now. And then you just go, it's like, it's pretty wild, like some of the differences, in price right now. So watch this space. Again, I don't think it's the end for this type of thing. A lot of people did get stretched, but right now the labor, like I've mentioned this before, the thing is that the labor market is strong. Like, we keep on hearing about all these job cuts everywhere, like Facebook, Meta cut 10 to 15,000 jobs. So many tech companies are cutting jobs. You're hearing this everywhere, but yet you look at the non-farm payroll reports, you look at these job numbers, and it all signifies strength. So someone's clearly hiring. And so until that dynamic changes, I think, like I said, while people got a job, all these payments, regardless of what it is, it can be paid for. But when the dynamics on the job market changes, that is where, first of all, you might start seeing a bit more, defaults on these loans, but also that might help the Fed to give, impetus to act on rates. That might, so I mean, it's a whole type of thing. Because right now we haven't even spoken about the Fed, but let's finish with the Fed, right? So we had a lot of these banks. The banks reported earlier, about a month ago, and a lot of them were penciling in 4 to 6 rate cuts. I mean, the first rate cut keeps on getting pushed out, and now they don't see it in the next meeting. They might now see it in June, because what's happening is the job market is still strong. The markets are still strong. The numbers are still supporting, decent growth, and we're seeing a very soft landing right now. Nothing like what people was projected in the past. So what's happening? These rates are not falling as some had projected. So how does that impact the overall market? I don't know. I mean, the thing is that the Fed they look like they have no reason to cut rates. That's the thing. And despite all the forecasts and all the models projecting this many rate cuts and this and that. So
yeah, the rhetoric is a bit weird because like the Federal Reserve Bank of New York President John Williams said that the U.S. Central Bank has still a ways to go in its battle over inflation, but also reiterated that the Feds will likely cut interest rates later this year. So it's just so weird, like literally 2 months ago, we had like a 80% chance of a rate cut in March, and now we have a 96% chance of no rate cut in March.
Yes, I mean that just shows where the Fed is, and so really it's like it's a toss up in terms of which way we're going to go. And like you said, mixed signals from the Fed, but right now there's no real reason to hurry any rate cuts while the job picture is still looking good, and everything on the surface looks good, even though underlyingly some things might be brewing, and we don't know what is brewing yet, but I'm sure in time we'll find out. But yeah, I just want to end it here, just talking about the Twitter page and the Money Discourse portfolio. So make sure you subscribe if you are interested in a lot of the tweets that we're doing. Thanks for everyone that has been subscribing. We're we're now at almost 200 followers, considering we didn't have that much before. And in terms of log, it's been a pretty good run so far this year. We're up 7%. Like I said before, taking that hit on SMCI. But again, it's just too volatile. There's 1 week left till expiry, so I thought no point. It might still work out, but not worth the risk for another $300 based on just a 1 week gamble. But again, this morning I went long Baidu again, and it's back towards that 100 mark. So trying to play China again after China did work out quite nicely. Pretty much all the trades worked out. And then there's my short on Mara, Carvana. Tried a Rivian bounce. We got till June, so hopefully we can sort of stay around these levels and not drop too much more. But so feel free to carry on following the blog. The Discord portfolio. Follow the Twitter page. Like and subscribe if you haven't already. Any final words?
Yeah, just mainly about crypto. Some people are saying that the price of Bitcoin is telling you that the Fed isn't done tightening rates. What do you think about that?
Yeah, you know what? If they're not done tightening rates, then it makes it weird. Like I would have thought you want more dollars. That's more rate money. Higher rates, more reason to keep the dollar. Again, and trying to been trying to figure out the reason why these cryptos are moving so much to the upside. And some have touted the halving of in the next 40-50 days, the next Bitcoin halving. So there's some ramp up from that. We obviously had the Bitcoin ETF go through, and there was a lot of FOMO, and now so Ethereum is now getting the bump up on the next, likely acceptance of an Ethereum ETF. And there's all these projects, but there's no real reason for this big rise other than just the market is just hot, right? And when you look at the rise, it's not happening gradually. As we're getting higher, and we went off this base of around 16, 17,000, we trickled up towards 30, 35, 40, but this last from like 50 to 64 is just happening in days, and we're literally going up 4, 5, 6, 7%, where this more sustainable gradual rise is now being replaced by some exponential rise, which often basically signals euphoria as everyone FOMOs in, and then that's generally when it ends in tears, short term anyway. So I don't know, it's getting a bit juicy up here. Like there's no way I would be looking to go long at Bitcoin at 60,000 when all this time had plenty of opportunity before. But again, this is how the market works, herd mentality, FOMO. So if this keeps on going, I could see the FOMO hitting hard even more. And we'll just see how it goes. But we see, like I said earlier, we've seen Doge, Sheep, all of those meme coins all just going up. So it definitely seems that herd mentality and the FOMO trade is pretty strong right now. So yeah, it's a good space to be in if you're already in. But personally, I wouldn't be getting into it right now. In fact, I'm shorting those crypto stocks. That's just because that's just what I do. So,
well, we'll see you guys in the next one. Hopefully, it won't be this long until the next one.
Until the next one, yeah. All right, have a good one.